BRICS has their reserve currency. It's gold. That's what they're going to use. There's no secret about this. They're setting up a vaults in Malaysia, Hong Kong, Shanghai, Saudi Arabia, and other places on the cards. Shows you they're going to use gold as the reserve structure and the trade balancing structure. And out of the U.S. Treasury, we have what? We're going to try and use stable coins. I ask you, which side of that fence would you like to be on?
Monaco 64, home of alternative economics and contrarian views. I've got the pleasure of speaking with the co-author of A Pocketbook of Gold again today, Peter Carlin. Unfortunately, Jim is not around anymore, but it would have been great to have us three together. But anyway, welcome back, Peter.
Good to see you, Mario.
Nice to see you too. So yeah, we're speaking here on the Friday, October 10th, and it's been, I guess, a historic week, not just for gold, but for silver as well. So I'll let you, chime in.
So a very big week for silver. Finally getting through $50 an ounce again. That marks the third time back from 1980 when the Hunt brothers got stopped out at $50 an ounce. Actually, they were taken out of the market by Paul Volcker, who handed the book to Jim Sinclair, my co-author, and said, you need to work this off because we're shutting down the market. And so he was, in return for a $1 billion loan to the Hunt brothers. And so he was handed the silver book that Bunker tried to corner the market with and threatened to take delivery, which shocked COMEX into action. And I remember, the way it happened was Paul Volcker called him up and said, let's go to the Carlyle Club today in Midtown Manhattan. So he and Jim went there and he said, Jim, I've got a problem. Bunker's trying to corner the silver market and we're going to have to stop him. So we're going to give you his book and it's going to be your job to shut it down. And so what he did was he created a market where there were going to be no more longs to open. If you were short, you could buy to close. If you wanted to open a new short, you could, but bringing in new longs, opening a position long was no longer allowed. And then, of course, that was part of the end of the great silver run. But so third time then, and that the Bunker Hunt period in 1979-80, the 2011-12 period when we hit $50 again, when we were only at 2000 or 1950 on gold, which shows you how distorted the ratios become now. And yesterday / today. Yesterday we had a very traditional straight spike up when we went through 50. So all the people on margin and the day traders started buying. When we got over 50, we went up to about 51.35 or so. And then COT, the locals came right back in and sold it right back down. But we're starting to get our feel for being over $50, and it doesn't look like this is the end of the move by any chance. But if we have people talking about how metals are no longer important, like you were saying about the FT, we probably have more to go on the upside.
Yeah.
Jim was very much like that. He saw a lot of these press reports, as markers in the market.
Yeah, and what going back to 1980, why do you think it was so important for Paul Volcker to stop the Hunt brothers if silver is not really that important as a monetary metal or anything?
Well, there's a lot of theories about that. Number one, it looked like COMEX was going to have to novate the contract. They had no ability to deliver that amount. And what Bunker did was he didn't take delivery, but he kept threatening to take delivery, and it kept pushing the market to ridiculous levels. And so you had some real political problems with regards to that. Number one, you had the situation where people all over America were starting to turn in family heirlooms and things like that, which was causing a lot of distress just on a kind of macro social level. And I think politically, they wanted an end to that. And there were rumors also that Bunker had some plans to introduce silver as a currency in Texas. And that was also political dynamite because some of the people who claimed to know him said maybe he harbored some ideas about carving out part of Texas to create his own state or country or something. But that's simply a rumor. I'm not going on record saying that.
Yeah, I heard that John Connolly, the former governor, the guy who was riding with JFK in the limo in 1963, was involved as well with the Hunt brothers.
Yes, of course. Yeah, because I think he was the largest independent in the oil business at that time.
Yeah.
You
You spoke about like publications talking about gold, and I saw this today in the FT. Gold bubble could prompt central banks to sell the metal. The world is a thoughtless prisoner of history when it treats bullion as a desirable store of value. This is from William Buter. He's originally from the Netherlands, and he was a Bank of England governor, worked for Citi, and he's saying that gold is in a 6,000-year bubble, which is really weird. But it seems like pure propaganda. So maybe you could give your opinion on that.
Well, it certainly is pure propaganda, and one wonders why not only the contradictory absurdity of a 6,000-year bubble, but also the fact that he believes that central banks are going to sell any gold at all. This is not 1945 when the United States held 75% of the above ground gold and could manipulate things as they wanted to, as they did at Bretton Woods. But you're not going to get China or Russia to start selling gold to keep the price down. It's simply not going to happen. This is one of the true Achilles heels, especially of the EU, which does not really have as much gold as it thinks. And quite honestly, for the big holders like Germany and Italy, 50% of their gold is still in the vaults of the basement of the Federal Reserve Bank in Manhattan. So they're not being remitted very rapidly, even though Germany has made some fairly stringent demands. You can also see that the problems with deliveries from LBMA and that other people have made requests for. Maybe it really wasn't so much about tariffs after all. maybe going to New York has other purposes.
Yeah. You mentioned the LBMA. Did you see over the last few days that actually there's been like a huge discrepancy between the spot silver price and the futures price? There's been huge backwardation.
Yeah, the co-basis is on fire.
And the lease rate for LBMA silver is like 39% last night. What does that mean? Does that mean there's no silver in London?
It means somebody doesn't want to let go of it, or there may not be enough silver in London. However, I would say that I don't believe the stories that there's an actual physical shortage of silver in the world. I believe that you're witnessing something which happens a lot at this time of the market, is that the people with the silver are refusing to let go of it. So that's going to push lease rates up right away. They know the market's in a bull phase. They have no intention of selling it. That's why all these silver shops and silver dealers and everything, for any significant amounts, you see inventories down at zero on their websites. They've got it. They've got it. Go and bid $15 over spot. They'll sell it to you.
Yeah, I agree with you, but there still creates a bit of a shortage for the market. Because, like you said, though, especially gold, most of the gold, 99% of the gold that's been ever mined is still above ground. So to me, it seems like people, like you said, know we're going higher, but also they're concerned. They'd rather have gold and silver than fiat currency in the bank, right?
Absolutely. Because remember when Volcker shut down Bunker Hunt, he was also prepared to raise rates to 18% as a way of bringing the bull market to an end. Or as Jim used to say, Volcker was a class act who was prepared to raise rates until you could suck money off the moon, and he did. We're in a situation now where everybody wants rates down.
Yeah, they can't afford to raise rates to 6%.
Exactly. Not only that, the cost of servicing the debt would explode. They're cornered. They're in trouble. They're in trouble. But these markers, like, it's interesting you said that, because remember, just a few days ago, you were showing this article that you had from 2004. Was it that long ago? Yeah.
It's an editorial and it's anonymous. And I kind of wonder if it was William Buter who wrote that. I wrote up here, it's from April 16th, 2004, and the price was at $400.65. So right now we're at 4,000. So
these seem to be like panic signals, or sometimes with the less economically versed, they are just naturally occurring contrary indications. For instance, the same situation occurred in the first great bull market of the 1970s with Jim Sinclair, the man I wrote the book with. When he took out a full-page ad in the early 1970s with Barron's saying, when gold was $90, saying that gold was going to go to 900 an ounce within a decade. And at first, Barron's didn't want to take the advertisement. They said it was ridiculous and made no sense. And then he explained to him why he thought it was going to happen in terms of balancing the international balance sheet of the United States against foreign held debt. But when he went in that day, when it was published, when he went into Delmonico's restaurant, the famous restaurant on Wall Street, the entire room of Wall Street bigwigs broke out into laughter at him, saying the most ridiculous thing they've ever heard in their life. My God, you have made a fool out of yourself. And of course that happened. So he was proven right against the crowd. And it actually happened again in 2002. Barron's actually contacted him and looked him up to create an article about the only gold bull on planet Earth, just to make fun of him and try and embarrass him. And as he told me, he said, when we saw that $38 billion worth of mining derivatives were short in the market, that gave me a lot of confidence. We were at the cost of production. We thought we were going up. But when Barron's said they wanted to interview me as the only bull in the entire planet just to make fun of me, that's when I really got bullish.
That was a good signal, wasn't it?
Yeah. And they do happen. They happen. So, that the second time around, he as you know, the first time around, he gave the marker as 900. We stopped at 887.50, which is about as close to a bullseye as you can get in this game. So he had a formula for calculating it, which was basically...
So before we proceed further with the interview, I just want to give a shout out to Dirty Man Safe. So with traditional safes, their so-called advantage is that criminals can't break into them. But Dirty Man Safe is different. Its advantage is that it's undetectable, so they can't even try to break into it. And that's only one of the many features of Dirty Man Safe. They provide 3 different sizes, and you can bury your gold coins, silver coins, bars, important documents, jewelry, and anything that's valuable for you. So yeah, Dirty Man Safe is affordable, convenient, provides you peace of mind, confidentiality, and sustainability. So if you want to find out more, there's a link below in the description. It will take you to a landing page. And if you use that link, you get 10% off if you were to decide to buy a Dirty Man Safe. And they ship it to Europe as well, not just the United States.
using the foreign held debt divided by the amount of gold that the U.S. Treasury holds and coming up with the number. In the book, in a Pocketbook of Gold, you can see the recent calculation of it, although it's now some 15 years old, which is $3.1 trillion worth of gold divided by 260,000 ounces that are held in reserve. And if you do the math, you wind up with $12,000 an ounce.
Yeah, I think you meant 3 trillion of debt.
3 trillion. 3 trillion.
And now I think foreigners hold about 8 trillion.
It's 9.
Yeah, 9. So 9 trillion. Is that just US treasuries, right?
Yeah, and if yes, that's right. And if the gold is still there and it's still the same amount, you don't want to think about what it means. Of course, we're not going to 36,000 because nobody will allow it. But
yeah. So it's 9 trillion divided by 261 million.
You've got the same underlying gold reserves with 3 times the amount of debt. So
it's 36.
6,000.
Yeah. Well, yeah, it sounds outlandish, just like that call in 1970, I guess. Right. But it's possible, 36,000.
It's possible, but I think that you're going to, before that, you would see severe restrictions on the market before that would happen. There would something would be done, but then again, back in those days, you only had to convince, the Bank of England and the U.S. Central Bank / Treasury. That's not the case anymore. Although I would say that it's also not in China's interest or Russia or India's interest to see that happen either, because then the domestic currencies become worthless. But they can manage it. But you need a much more concerted global effort than you did before. The Bank of England and the U.S. Treasury worked hand in hand all the time. As a matter of fact, to control the gold market in the pre-World War I era, the Bank of England handed off their gold book to J.P. Morgan to do it.
Mm.
There's a lot of coordination there. Now you've got belligerence. That's not going to work out as easy as people think. But all these markers help us to read the map about where we are.
Where do you think they will allow gold to go to if they won't allow it to go to 36,000?
Well, here you bring up an interesting point, because it's a question of who allows it to go where, and that is jurisdictional. Jurisdictional. It depends on where on the planet you are, and it's not always been the case. Gold is gold, no matter where you are, can be tested, so the same price applies everywhere, but that's not really the case. In the 1950s and 60s, when you could get gold for, $40 an ounce gold, that was when the gold pool was around, but call it the official price, 33, or when it started to loosen up a bit, it was around 40. You could trade it in Vientiane, in Laos, or in Hong Kong for a lot closer to 45, which may not seem like a lot, but if you get enough of it on an airplane and you can make 11 or 12% in a day, that's an enormous amount of money. The Valhalla, of course, was always India, because when gold was trading in the 1960s at around $40 in the West, with some loose markers and other gray gold markets in Europe, you could get almost $49 an ounce for it in India. So the market can be armed at times. So more likely what you're going to see is that there'll be a lockdown on gold. It'll become heavily taxed at most of the Western countries. And they'll be strict about trying to get it out of the country, which is why a lot of people are moving their gold to Singapore. And to America too, which has got now with DeSantis in Florida and Utah, and those notes that you were showing the other day that have embedded gold in them, then it's not going to be that easy to control. You've got whole sections of the United States that are willing to accept gold as a fungible currency. When gold starts to go up, when you start to go to 5,000, no one's going to turn it down if it's legal. And even if it's not, I guess there'll be a workaround. There's always a workaround. Although moving large quantities of it, you're not going to be able to work around. But there's going to be people who will take it.
So what about Europe? You're not so optimistic. They're going to try to control it more, you think? And the
Yeah, I think that could be part of it. But who's going to have the authority to do that? The European Central Bank? I mean, is the EU going to be even around in 2 years' time? It doesn't look that promising at the moment. It looks like a very difficult situation. I don't know where the marker is going to be, but it's not come yet. And I would suggest that probably if you start to go towards 8, 9, 10,000, then something might happen within Europe, but in other parts of the world, not. Of course, I'm sure as you know, and a lot of your listeners know, how easy it is to use fungible gold in America now, and how easy and legal it is for states to allow gold to be taken back as currency, as it always was before 33. So it'll happen. It'll still keep going there. I'm still positive that Switzerland will never completely be able to control it either. They may have difficulty letting it out of the country, if you like, but there's a lot of private jet aircraft in Switzerland. But the individual cantons are not going to listen to Bern. When Bern says, we want you to stop dealing in gold, you know Switzerland, Graubünden, Schwyz, these small original cantons, they're not going to pay any attention to what Bern says. They're going to do whatever they want. They're up a mountain.
Yeah. And they've got a lot of gold stuffed in the mountains, I think, as well.
Yes, they do. They do. And of course, so did the Indians, especially in southern India, like in Trivandrum, places where a lot of the temples are. They've been throwing offerings of gold into these temples, which are now vaults, for hundreds and hundreds of years. And God only knows how many thousands of tons are sitting within these things. The government did try and go in once in the Indian government, but they backed off because...
And it seemed like the Indian financial system, the financial institutions, they have tried in the last few years to convince Indian savers that they should get rid of their physical and just do financial ETFs. But I don't think the Indians buy that.
No, they don't. And every time they say it, like this editorial you're pointing to today, every time they mention it, with the price of gold screaming north, they look more and more foolish, and people are less willing to believe. They say, so it's a political liability to keep going on about it. I mean, when you consider everything that Britain's going through now in terms of social unrest, to have a central banker coming out, or an ex-central banker coming out and saying that, I mean, who in the name of God is going to listen to that? Although I will tip my hat to his 6,000-year bubble as maybe a bit of tongue-in-cheek humor. But exactly, there's nobody in Europe with the firepower to sell gold into the market.
Yeah, they did it in the early 2000s, but then they stopped.
Kind of bad timing.
Yeah, and I actually found his LinkedIn, and he had his website there. So I went into his website, and he even had his email. So I sent him an email about the editorial and said, if you want to debate me, you're welcome to come on the channel. I haven't had a reply yet. I don't expect one. But anyway, you sent me some charts. Do you want to start looking at them? Which one?
Sure. The one thing I wanted to say before we go into that is in looking at these markers that happen historically, we see the cycle in the real world moving through. And we can see that today, too. So if you ask yourself, like, where are we in the gold cycle right now? I would like to kind of promote the idea that we're experiencing something that's akin to the 1968 period. And when you look at it, it starts to make sense. Now, if we wind the clock back to 68, the gold pool has just failed. That's been in effect from 61 to 68. So the gold pool has failed, and we're starting to get into a two-tiered pricing system back in 68. So what else do we have back then in 68? Well, we've got the Prague Spring, which looks a lot like the COVID protests. And we've got the Paris Commune, which sounds a lot like the European protests over Gaza, which are equally like the 1968 London protests that you had over Vietnam and Grosvenor Square, where you had hundreds of people were arrested and some were pretty seriously injured. And then you also had the Tet Offensive, which is kind of like the fall of Pokrovsk in Ukraine, the fact that the war is now essentially lost. A Western proxy war that has failed, just like Vietnam, and that many in the USA want out of, but seemingly don't know how to exit it due to the grip of the military-industrial complex. And then we have another Arab-Israeli war that's underway and looks like it's ready to reach its zenith in a war with Hamas, Hezbollah, the Houthis, possibly Egypt, and non-Arab, Farsi-speaking Shiite Iran as well, going into a full-scale Middle East regional war. And that death of the gold pool in a two-tiered market in 68 sounds a lot like what's going on in Florida and Utah and Texas. And also the talk about no longer carrying gold on the book of the U.S. Treasury at $42 an ounce. So we've kind of been here. And of course, 68 also sees the assassination of RFK and Martin Luther King. And of course, now we have Charlie Kirk. So, history is moving in cycles. And, from that perspective, we can see that we're at an inflection point, both historically, where all these events in 68, I think, have their brother or sister in 2025. And we're seeing the same thing with gold. 68 is when literally they throw in the towel on controlling the gold market. I mean, by this time, Asia is already in full bloom. Other places have markets. They're trying to run a two-tiered market, but it's the pool has failed. Now they're going to try a two-tiered market. Within 2 years, that's going to be out the window. But 68 is the true demarcation point when everybody knew Bretton Woods was finished. Although it took till 71 and Nixon's announcement. But by May of 68, it was essentially over. And of course, that's when people like Jim Sinclair and the rest of the gold gang were, up to their eyeballs in the market. Their entry into the market when futures became tradable in 74 was the second big leg up. But the first big leg up is really 67, 68. And also that's when Jim's father, Bert Seligman, the great Wall Street trader, also started to take a firm position, which he took in one shot for millions of dollars and didn't liquidate until 1980. Just a buy and hold.
So that was Jim's dad as well, yeah?
That's right. Yeah,
what would he have done that offshore because you couldn't get gold in the U.S. back then?
He was in the cash market.
Oh, yeah.
When you have a corporate behind you, you can do it in the cash market. But also, I think you'll probably find out that Credit Suisse Switzerland was probably very favorable to Mr. Seligman. So you would just take it as a book entry.
Yeah. And for the viewers who don't know, the gold pool was the London gold pool. So that was the major central banks of the West. They decided to help the Fed out because it was harder and harder to keep the price pegged at $35 an ounce because of Vietnam, deficit spending, and also the Great Society spending of Lyndon Johnson. And I think, Peter, wasn't it the French that got fed up with it and said, we've had enough because they didn't want to keep giving away their gold to keep the U.S. Dollar pegged at 35. And there's that famous speech in 65 by Charles de Gaulle. He was saying we're going to have a crisis, a dollar crisis, because they're printing money without backing it by gold.
Right, and when because they wanted more money printed, and they couldn't keep the backing going, and that was when LBJ invited his Federal Reserve Chairman, who was it? I can't remember at the time, 60 and 64, 65. He invited him down to his house and he physically assaulted him and told him, start printing money. We've got people dying in Vietnam. William McChesney Martin? No. I can't recall exactly who it was.
Yeah, that's the one. Sorry, I muted myself. Yeah, I've got it here. Chesney Martin, there you go.
Okay, my
Oh,
memory
a famous incident.
Right.
Lyndon Johnson physically pressured Federal Reserve Chairman William Martin Jr. to keep interest rates low to help finance the Vietnam War and the Great Society programs. Johnson,
and he's about 8 inches taller than him too, and evidently threw him against a wall and like pinned him to the wall at his ranch in Texas.
Well, it reminds me a little bit of, not totally, but Trump has been quite hostile towards Jay Powell.
Towards Powell. And again, that's in this same thing that we're talking about, these familiar markers. Remember that 68, just before 68, we had a devaluation of sterling from 280 to 240, bringing it to exactly 50% of the value it had lost since the start of World War II. So, right now, we're seeing, again, the same thing in the FX markets. The dollar is not, as I said when we last spoke, it is not finished. It is not going down. It's getting stronger. And we just had a big incident in the yen this week, which showed you just that point. As a matter of fact, right when we wrapped on our last, discussion, the yen got absolutely decimated. It moved like 3.5% in a day. There, you can see it right in that movement there. That bottom where your arrow is right now, right there. That's when we finished our show. And then the next day we took off like a cannon, and we moved up from whatever that is. It's about 147.50 or something, and we went to 153.50 yesterday. Now this is not a flat price market. This is a differential market, and so this is an extreme movement for a currency market to move this kind of distance. Now this happened at the same time that gold was surging. If you want to take yen against gold, yen lost 5 to 5.5% against gold in probably 48 hours, which is a massive movement. So you can see the dollar and the gold are going up together. Yes, the dollar is going down against gold, but it's going up against all the other major currencies of the world. And I think, quite honestly, the situation with the Japanese yen is just getting underway. By April of next year, I think we're going to be at 200.
This is the gold price in yen. So, yeah, I mean, I've been following this for years, and I was waiting for it to break 400,000. Now it went to 620,000, and I guess it coincided with the picking of the new prime minister, this lady who's supposed to be very Takaichi. Yeah, she's supposed to be very pro Abenomics, which is basically a weak yen, more money printing, and so on.
Well, they don't have a lot of choices, I mean, and you can see this battle now for devaluation that's going on. I mean, Bessent has made his policy very clear. He wants a Plaza Accord number 2, and they want the dollar down. But how are you going to get it? It's not going to happen against the yen or the euro. I mean, how is it going to happen against the euro when nobody will touch euro debt? Who buys the debt of a country that's intent on going to war with Russia? Why would you touch it? So that's the euro has got nowhere to go. And you can see when we last spoke, we were at 117.5. And I think earlier today, we were at 115.5 on the euro. So this is not coming back. So Bessent may want his lower dollar, but if the Chinese won't budge, and let their currency appreciate, I don't know how he's going to get it, because the only place you're going to get it is against gold. That's the only currency you're going to be able to devalue against.
Yes,
And
the only current.
Vis-a-vis the BRICS, that might help him.
Yeah, that is, I guess gold is the only currency that can't fight back because it's neutral. It's not political.
Right.
Yeah.
Exactly.
Yeah.
Exactly.
Yeah.
So, if you look at it from the American point of view, the Trumpian point of view, America wants to have a manufacturing renaissance, which means, it uses its massive energy resources to return to a nation with a strong industrial base that's going to be export oriented. It needs a weaker dollar for that plan to come together. I don't know how they're going to do it, but the one thing that it means is that if the last Plaza Accord in 85 is anything to go by, it means a couple years out, you could be looking at a stock market crash. But that's what happened in 87, although we went right back up. And I think that's part of the situation we're getting into. We're going to start seeing, like we did with the yen, like we saw with gold and silver in the past week, and especially yesterday when we saw that move up to 51.50, and then we were down at 49 and a quarter by the end of the day. And then, of course, the pros, the good traders, come in and buy that move down, where everybody else is being forced out because they chase the market. But you're going to see volatility. You're going to see real volatility. So anybody who's out there trading options, you better watch what strikes your short gamma on.
Yeah, in your book with Jim on page 71, you say, as is both presently and historically evident, the attempt to restate wealth to a lower level becomes a competitive event in its own right as nations fight to devalue their currencies against each other to reduce the burden of indebtedness. It should be recalled that when FDR lowered the value of the dollar vis-a-vis gold in 1933, America was the 9th nation to do so in a 3-year period. So that's like a beggar thy neighbor policy, isn't it? Yeah.
Yeah, competitive devaluation.
So, I mean, the worst thing that investors and people out there can do is hold on to these currencies. That's why.
A lot of the pros that I talk to in the market, talking about not trading, I think it's important for people to separate out the core position from the trading position. You've got to have a bunch of gold that you take and throw in the backyard or hide somewhere in a fungible form, like small coins, half ounce, 1 ounce, maybe even those quarter or 10th ounces, depending on your own personal wealth, and forget about it. Because that's your kind of survival money, or your survival insurance, because gold is a form of insurance. And the rest is kind of the trading position. What you don't want to start doing is trading the insurance, which is what a lot of people will do. But there isn't a lot of the pro people that I talk to who are avid in the markets and at a high level, and who also have personal holdings, are saying, this is getting so bad. We're starting to think about taking the entire savings position and turning it into metal. Because why are you going to have any money sitting in a bank account other than, for daily, monthly, quarterly expenses, if, all you're doing is losing on it? That, okay, you can run out and buy treasuries and try and keep up with the game. Look at how that worked out for the Japanese in the past week. Not well at all. You could have JGBs, which are giving what, 1.6%? On the long term, even less, 1% on a 10-year probably, or something around that. And you, in terms of gold, you just got clocked for 400 basis points in a few days.
Yeah, I saw a tweet today from a guy that I've spoken to before on the channel. He's in Hong Kong, and he's Italian, clever guy, and he posted this today, Peter, and I thought it was really interesting. It says 11 freaking percent inflation expected in Japan. Japanese households expect inflation to rise by 11.9% yearly from now. Medium 10%. BOJ survey. So, I mean, even if you get a 30-year JGB at 3%, you're losing 7%. Yeah, it's crazy.
That's ridiculous. So that's the BOJ
Survey.
group.
Yeah.
Yeah, it's not good. Mrs. Watanabe is not going to be happy.
Yeah, no. And what about, yeah, I agree with you. One needs to try to keep as little fiat currency deposits as possible, in my opinion. Of course, if you're running a business or a household, you need some kind of balance. But what do you think about?
For those that you can hedge that by moving into the futures market.
Yeah, you can do that. What about people that have some exposure, let's say, to stocks like precious metals miners that have done really well? Should they be worried as well about the solvency of the banks that could affect the brokers that they hold the stocks with?
Not really. I mean, when I kind of disparaged the miners, like I think I did last time, I was talking mostly about these penny junior miners who have suspect management at times. But when you start to talk about the really big players in the market, the top 3 or 4 people, they might actually be a good place to hide out. They certainly were a way to own gold in the 60s and in the 70s. One of the ways in the 60s that people owned gold was buying South African miners, and it worked out quite well. So that's one way you can circumvent it, because their balance sheet is exploding on the upside. They've got a huge amount of money embedded in the ground. So some of the miners, I think, are actually probably a way that you can diversify your way out of it. But there's 2 ways to look at it. Number one, if you go with the big people, you're not going to get as much upside. If you go with the small people, you've got some suspect management teams, but you also have a chance for takeovers like Kirkland and Kinross and other people picking up these juniors when they buy them out, which you will get a massive wave of, which is starting now. The juniors that are good, that have good proven reserves in the ground, will be bought up by the BRICS of this world, by Agnico Eagle, who I think are the people who picked up Kirkland and Kinross. You're going to get people who are going to perform well off the basis of that. So one's a bit riskier. You could be a takeover play. That could be very, very interesting. What takeovers on miners can be like, you can get 50% overnight on the upside, but it's a bit more risky. If you just throw darts at a board, it's expensive. But some of the majors will perform. And also, if people start to tax gold, like within a certain region, a certain country, or something like that, or try and prevent gold from being moved across borders, well, you can always take your shares with you.
Yeah.
And then you can maybe take physical certificates, which a lot of these miners give, and just go to Hong Kong, open up a brokerage account, and liquidate it. Isn't it funny talking about financial freedom in China as opposed to what you can do in Europe?
It's ironic.
It's all come to that. So, please.
No, I've got some other charts here. Do you want to look at the gold?
Yes, please.
Which one, weekly first or daily?
Well, look at the weekly first.
Yeah, I'm going to bring that up. All right.
So you can see, there we go, 1, 2, 3, 4, 5, 6, 7, 8 weeks on the trot, and it's gapping this week. So you can see the horizontal support line, which was resistance before. And I think at the lower bound, you can see how many weeks. Each one of those green bars that you see is 1 week. And this is not a parabolic. This is what a reset looks like at a higher price. Those steps, those ladders, especially in the past 3 weeks, are the kind of things that happen when you're getting a fundamental move. And I don't see any sign of a blow off there at all, especially when you look at this week compared to last week. We opened right where we closed and are moving higher. That's a chart for the record books.
Yeah. I think Jim Sinclair used to call these a staircase.
Stairway up.
Huh?
The staircase up, yes.
Yeah, staircase up. Yeah. And I mean, like you said, yeah, it's not parabolic yet. And yeah. And also eight is that 1, 2, 3, 4, 5, 6, 7. That's a Fibonacci number. I don't know if you're into
Right.
Fibonacci. So
No,
the next
absolutely.
Fibonacci number is 13. So we could still go up another 5 weeks
Yeah,
straight and then maybe see a correction at week 13.
right. And I would say too, with everybody focused on Bitcoin and Nvidia, we haven't seen public participation in this yet. So even though there's a lot of capital out there in the existing gold stock with the price movement, and open interest is going higher in the futures market, you're not seeing the kind of thing where people are, lining up around the block to sell gold or to buy gold. You're not seeing a huge amount of public participation in the market yet, which is always a sign that you're getting towards the end. So the market looks like it's got further to go. And quite honestly, I'd say something else as we're talking about gold. And, when people are thinking about, well, okay, I'm here. How do I trade out of this? How do I get out of this if there are any restrictions in gold? Well, one thing you do is you go to a bank with your gold and you borrow against it. It's a tier one asset now. Making that a tier one asset tells me, at least, as a member of the public, well, don't sell gold, just deposit a portion of it with a bank and take a loan against it.
Yeah, interesting point. I haven't thought about that. Not sure. We'll have to test it here in the UK, even though, but so we got a daily chart here.
Right? You see
Yeah.
yesterday's move up and back
Yeah.
down. There's the power up trend, which was starting to take us higher. That we have the big tail on the upside that reversed itself back down slightly. The power up trend is gone now, which is probably a nice, healthy sign. And then the main trend line, is intact. We touched down on it with a perfect touchdown there today. There we are, and we're moving back up.
Yeah.
So that's classic. That's bull market action without a blow off top. The market has to rest sometimes. So, we got that yesterday, and that was a perfect sign. Of course, you can see the formation. Thursday, pullback, Friday, up. Nobody wants to go into the weekend flat or short. Nobody. So, everybody wants to be long Friday going home, as that happened weeks now because of the threat of war. God knows what.
I got silver up, and the thing about silver, Peter, I looked yesterday because silver, I mean, really historic. It broke through 50, the highest level in the history of humanity, in dollars at least. And I saw nothing in the financial press about silver. I didn't see it today, so it seems to me that it's still early days.
I would have to believe so, and you're just not going to be able to control silver the way you can everything else. It's simply so widely distributed, and the people who can't afford gold because its absolute value is so high are going to start buying silver, and people have silver, in other forms lying in their possessions, in cutlery and trinkets around the house, in old, Belgian clocks, and a lot of other forms. So I just don't, this is silver's moment now. You've seen it in the past week. I don't know what the year-to-dates are, but the year-to-dates in silver have got to be explosive. They've got to be something like the high 50s now. The really, really, really strong movements up. But they don't, to me at least, they don't show a lot of sign of topping. It looks to be like, it looks like to me like silver's on its way to 60. And quite honestly, even with a differential, even with a ratio of 7-0, that doesn't even put us in the ballgame. I would say one other thing.
Sorry,
Sorry.
let's see, silver is year to date up 62%.
62%.
Yeah,
You know,
gold, gold,
even this S&P 500 can't compete with that.
no, and gold is up 51.5.
Right.
Platinum,
Yep, go ahead.
platinum
Platinum's even,
78.8 and
that's
palladium
the
61.5. So,
platinum's been a star performer, but if you take physical, it's got a huge premium on it because nobody wants to store it. But there are other ways to get a hold of it, in the financial exposure. But yeah, I mean, it's incredibly strong. The movement in silver is actually a great help to the gold market when we start to get into the strong phase of the gold bull market. Silver will lead a lot of the time.
yeah, it did I guess in the second half of the 70s or latter part.
Yeah.
And also I remember from like around 05, 2005. It took a little while, but it caught up and yeah, it's always been in the fiat era,
Right.
silver takes over. And Jim Sinclair, what did he call gold on steroids or something?
Yes, exactly. Yeah.
Yeah.
Gold on. Yeah. So, there's a lot of volatility there, but, volatility is what presents you with trading opportunity too. If you've got the guts to scale down buy when we get these dramatic sell-offs, if you've got the nerve for it and the experience and you're smart enough to not use margin because, silver is a margin play already. So,
Yeah, I mean, I did that. I did that with gold in like from like '05 to '08 in the futures, and I mean I had a certain amount in the account, but I didn't use any leverage, even though I bought a future, and every time I saw gold smacked, like let's say after the COMEX open, usually I used to go in and buy one or two lots and then go up and I just get out. And you do that,
right.
and most of the time it works, and it worked out really well. You just need to, it's not something you can do part time. You got to be there watching it all the
Yeah.
time.
And the other thing is that, you have to be careful that, when it goes against you, you have to have clear stops and you have to religiously believe in them. Otherwise, you get married to the trade and then you can look at a disaster because let's face it, there were a lot of people in 2011, 2012 who started scale down buying. And that was a tough road to go. If you were on margin, all you did was throw money away, which is why really in the metals environment, if you're not a complete pro, it's best to stay away from any form of margin. The market's volatile enough as it is, and it will pay you back handsomely if you just expend more cash to hold the position and then scale yourself out of it when it goes up. Don't want to encourage people to trade something that, if they're not experienced as traders, that tends to lead to a lot of disasters. The screen jockeys are out there in force, pounding away on the screens night and day with margin, hoping to catch a $2 move to the upside. That's not a way to behave in the market. No. That's not a way to behave. So, we're in this situation now, and we're in this monetary crisis, which is why we're getting the movement in the metals. We have this monetary crisis. This is the world that we're in. It's not something else. It's the core problem that's going on now in the world of finance. And then it was always set to happen, but the Russian sanctions just
accelerated it as well. Yeah. How come? Why do you think? Well, I guess the mainstream they don't understand gold nor the monetary system that much, even though some people seem to be starting to wake up, like Mohammed El Arian and Ray Dalio and people like that.
Yeah, the bond market kings. Yeah, that's concerning. I mean, with all due respect to Mr. El Arian, he's never been really in the game or on. And neither did he make a great champion at Harvard.
No,
so,
but I mean, you and Jim were forecasting this because it's a pocketbook of gold, a survival manual for monetary mayhem. And the thing is, Peter, it's scary that I went into London today. I told you I bought a few silver coins. And I was thinking because people say, were saying, let's say 10 years ago, if gold ever goes to 4,000, the world will be chaotic. But it didn't seem chaotic to me, London. It was normal. And we're at 4,000. So I don't see any reason why it couldn't go to 8 or 10.
One thing for sure, the bull market is not over.
Yeah.
You
And you know what I was going to say? I kind of lost my train of thought is I think when even the people who are in the financial sector, I don't think most realize that we are in a monetary crisis and monetary mayhem. When they realize that, then things will really get interesting, and it will get even more interesting when the public realizes. That will be towards the end game, won't it?
It'll certainly be another marker along the way of it, but I think we're getting there. Keep your eye on the yen. The yen is the canary in the coal mine. That's what this week shows you. This week shows you the yen is going to be the canary in the coal mine for when both sterling and the euro start to sharply move down. And that's going to tell you when they're going to have to do something drastic. Although I will be honest with you, the world is so bifurcated now between BRICS and the West that I don't know what kind of coordination with the rest of the world Washington is going to get with anybody. This is what's so damaging about the Russian sanctions, and why you start to get to this conclusion that nobody really thought this thing through, what they were doing. I mean, just on a simple basis with Russia, the simplest basis with Russia. If you look at what was happening before the end of Nord Stream and sanctions, right? The Russians were happy to sell significantly discounted oil and gas into the West to keep the industrial, part of Western Europe humming along and German car manufacturers happy. And then, because of the promulgation of this conflict, and the average Russian person was happy to do that because that meant that they were making money as a part of the Russian economy, getting foreign exchange in, and they would buy lots of nice bling from Italy, keeping everybody in Italy very happy too, who were selling bling because Russians love their bling. And then they love their holidays on Côte d'Azur, maybe pick up a cheap little pied-à-terre in Paris. And, everybody was humming along quite nicely with that. And then they put sanctions on them, and the money couldn't flow out of Russia anymore. If they had not put the sanctions on and started the war, a lot of Russian wealth would have run away into the West. But because they put the sanctions on Russia, especially the EU, they blocked the door. So the Russians couldn't even get their money out, which a lot of them happily would have picked up a couple $1 million, a couple of tens, $100 million, flooded into Paris, London, Madrid, and said, okay, well, we'll wait till the war's over from this side of the conflict. But that's what makes me think nobody thought this through, or whoever did picked a strange sequence to do things in. So now all that capital is locked in Russia. All that money stayed in Russia. Now everybody's in holiday in Sochi. Of course, we all know what's happening with Thailand. They've literally bought Phuket. They've literally bought Phuket. And so it seems like, the intention of sanctions was to collapse the Russian economy was thwarted by the very people who were trying to do it. You couldn't make it up. I mean, if they had left the gates open, which was the stated objective of the West, hoping to overthrow the Russian government, you could have, or produce regime change, which is the stated attempt, you could have created 1,000 little miniature Boris Berezovskys running around all over London and Paris. But because they put the sanctions on it, you couldn't. So it doesn't look like anybody thought the whole thing through. The sanctions on Russia were and are the biggest fillip the biggest supporter of BRICS
Yeah,
that you could
I agree.
possibly engineer. Now you have a system where you will never get global coordination again. The world has been divided. And this is a plan of the globalists.
Yeah, it didn't work out very well.
Not very well.
So to wrap up, you were talking about 1968 as being the trigger for the gold bull market into 1980. Do you think 2025 is the year, or was it 2024? And how do you think it's going to last 12 years like back then, or we can't really tell?
It's you can't really tell how it's going to wind up, but I would say that the inflection point that comes with 68, you have a period before it where gold has to be controlled for like 7 years with the gold pool. We don't have a gold pool now, and you're not going to get a gold pool now. You might get individual countries try and tax the sale of gold. You have something very different going on now, which people should pay attention to, I think. BRICS has their reserve currency. It's gold. That's what they're going to use. There's no secret about this. They're setting up a vaults in Malaysia, Hong Kong, Shanghai, Saudi Arabia, and other places on the cards. Shows you they're going to use gold as the reserve structure and the trade balancing structure. And out of the U.S. Treasury, we have what? We're going to try and use stable coins. I ask you, which side of that fence would you like to be on? Which side of that fence would you like to be on? This doesn't make sense. Stable coins, there's going to be a disaster. So the world is divided in more ways than one. It's divided militarily. It's divided politically completely. Now it's being divided in terms of banking, in terms of reserve currency structure. And then you're going to see that when this thing plays out, that the people with gold, the golden rule will apply. He who has the gold makes the rules.
Yeah.
And so it doesn't look very, very intelligent to go into this crazy stable coin thing that Besant and everybody's talking about. And then, you have Russia, China, and India saying, we're going to use gold. BRICS has its reserve currency. It is gold. The West is going to try and do something with crypto, and I don't think it's a very good idea, but
no, I agree with you, Peter. Thank you for your time, and
good to see you again.
We'll keep in touch and keep
an eye on the yen.
Keep an eye on the yen. Yeah, the higher the dollar goes against the yen, the better for gold, and the worse it is for the world, I think.
Right. The structure, you'll see there's going to be signals of where the cracks first appear. The yen, because of the indebtedness, because of everything going on with Japan, looks like it's going to be the first canary in the coal mine of several canaries.
Okay. Thank you.
Okay. All the best.
All the best.